Hello everyone, this is Kurt from Trading Options for Cash Flow, and in this video I am going to show you how you can enter a trade that gets assigned. One of our users asked me to demonstrate this in a video, and this is what I will be doing right now. So first and for all, let's start by creating a user profile very quickly in this demo. So I will call the trader ID just trader1. And the account is demo account. Account name, that doesn't really matter, but I will call it account 1. Type of account is like a margin account. Maximum portfolio allocation for the whole of the account, let's put it on 50%. And per trade, let's call it 10%. With this data entered in the user profile data, I can go to the account and actually select here the demo account, and I can enter, let's do that right here, the enter date. Let's say the first time that I started using the account was the 1st of this year, 24. Starting capital, let's say 25,000. Dollars net leak is still, when I haven't made any trades yet, 25,000. Currency, I will select United States dollars, which give me an exchange rate vis-a-vis this main reporting currency of 1, and the portfolio data, of course, at this moment with no open positions is still at 0. And this populates also here in this overview. And with this being entered, I can start actually putting in trades into the journal. So we'll go to the journal tab. So I can start entering now trades into the journal. Let's say that I will sell a cash secured put of Intel. So I will do a sell to open. I will select, of course, the relevant data for the trader account and also the trader ID. Let's say that I opened this cash secured put in January, maybe the first week, let's say the 2nd. And the option that I've chosen was cash secured put. The ticker, I will select Intel as an example. And let's say that the share price at the moment of the transaction, let's say $45. I will enter a short description of the strategy. It's a cash secured put of 45, and with an expiration date, let's say beginning of February, let's say, for example, the 9th, Friday of that week. Strike price, I will choose the strike price of not 45 but 40. I will sell 1 cash secured put, and I will get a premium of that for $2.50. And I will slide a little bit to the right. Total fees is $2 in my case. IVR and SPY beta delta doesn't really matter this much in this demonstration, but let's say that the margin requirement or the buying power requirement for opening this position was $1,200, and my position is still open at the opening, of course, so I need to complete here these fields. Initially, I will have put, of course, 250 here and 1200 as the margin requirement, or BPR. And let's say it's a positive delta in this case, let's say 4, for example. As you can see here, the status is marked in red, the open status, and that is, of course, we are today the 18th of February and the expiration date is the 9th. So the spreadsheet actually indicates. Let's imagine that indeed I would have closed that position, let's say a couple of days before expiration. Let us enter that together. Let's say, for example, the 31st of January, I close the position. So this is a buy to close action. Again, here the price of the underlying and the IVR is not that relevant for this demonstration, but the quantity is still 1. The closing price is, for example, $1.50. and the closing fee is the same also here too. I have a cold, so if you hear that my sound is not that optimal, excuse me for that, but nevertheless I will continue. And as you can see here, once that I've entered the closing date and the transaction type to close the position, the trade results are calculated automatically. I have $99 as a positive P&L. Those red fields still needs to be solved, and once that I actually close the position, as you can see, the whole row turns gray, and I still have here my trade results. So now I have my first cash secured put that was actually closed for a profit. So if I go to the results report, as you can see, and I've selected for all the accounts, all the traders, and all kind of stocks from a period till a certain date, from the 1st of this year till the 31st of March. That means that actually my trade has been closed in that time frame, and it shows up here in the distribution and the results per closed strategy, $96, and also here in the total net result I get the parameters here that are calculated. Now let's open a second cash secured put, and we will get that one assigned to demonstrate how actually you should or you can enter that into the spreadsheet. So I go back to the journal. I will open again cash secured put. Let's say, for example, I will do that on the same day as I close the other one, the 31st. So a new position, the 31st, demo account, trader 1, sell to open, cash secured put. Again, Intel. Let's say the share price at this moment of the transaction was 45. The stock has gone up a little bit, and I've sold the cash secured put of let's say 48, strike price of $48, and the expiration date, let's put it on the 16th of February. So a rather short time frame, but nevertheless for this demo that's quite all right. The strike price, like I said, was 48. The quantity is 1, and I got a premium of $3 for this one. Total fees is still the same of $2 per transaction, and let's say that the requirement is also 1200 in this case. Again, I complete everything here. In my initial setup, I need to open the position, of course. The current price to close is, I always take the same as my transaction price initially, and that's what I do. 1200 here. I will leave the SPY beta delta for now, and my position is open. Of course, it's still the 16th of February expiration date. We are the 18th, so it's still indicated here in red. But let's imagine that I was indeed assigned because the stock has dropped below 48. So let's say it went down to 45. And how do I enter that now in my spreadsheet? So I go to the part where I have the closing parameters. Let's say I got assigned on the same date as the expiration date, which is the 16th of February. And now I need, of course, to indicate that this is actually a transaction that is automatically closed once that I get assigned. So I can indeed here put buy to close. It's and I enter the same information again. It's one position that I close. When I'm getting assigned, of course, I don't have my closing price will be 0, because once that I got assigned, I will be able to keep the full premium, and I don't need to actually make a transaction, and I don't have to pay a fee either. So this is 2 times 0, as you can see here. And now if you go to the right, you can see that on this cash secured put, you have earned a net P&L of $298. And now to complete actually the assignment itself, I can here indicate that I got assigned as part of the information, but of course I have to buy the shares, and that's also a transaction that I need to enter into the spreadsheet, which I do right now. So I said that I was assigned at a share price of $45. So on the 16th of February, I indicate here the 16th. I am still trading in my demo account with trader 1, and here I select buy shares. Okay, I have to select here the ticker, ENTC, and I have to enter how many shares that I bought, 100 shares. And the transaction price is, of course, not the share price as it was at that moment in time, but actually my strike price. So I have to enter here 48. And my total fees, that is the fees that I have to pay for buying shares, and imagine that that is $5. I'll indicate here $5. And my broker says that I have a margin requirement on holding that stock. Let's in this case say $1,200. Those are information that you can find in your broker's account. I bought 100 shares. I still have that position, so it's open, and my requirement remains 1,200 in this case. And now I have an open stock position of 100 shares of Intel. No P&L is calculated because I'm still holding the stock. And as you can see here in my trade results, the second cash secured put is considered as being profitable. And if you go to the results report, you can see the second cash secured put is considered as being profitable. And in my overview of open positions, the shares are showing here. So, of course, I'm being assigned because the shares went down. So basically, I'm holding shares below the strike price for which I have sold a cash secured put. So you could say that I'm actually in a losing position. And if you make here the total price of actually the net profit of the cash secured put and also the unrealized P&L for the shares, and you can see actually you are at this moment still losing. This is actually how I enter at this moment in time the position once that I am assigned. Now there is a second possibility on entering this kind of transactions into the spreadsheet, and I will show you how that is being done. Let's say, for example, that I will go to the journal. Let's say, for example, that you don't want to show any positive P&L for the second cash secured put because you say, okay, actually the stock went below my strike price, so I'm not profitable at that moment in time. Knowing that you have received a premium of $3, I believe it was. How much is it here? Yes, $3. That means with a strike price of 48 that your break even is at $45. With the share price actually at this moment in time being around 43, that means that you are in a losing position with your shares and that you are actually $159 below your break even. So what is now the second possibility for entering that into the spreadsheet and being more realistic, you could say, in showing the P&L is instead of actually closing it here as a buy to close action, you could actually also made it a roll. And actually what we do here, we consider that you roll from a cash secured put open position into the shares. So you roll actually your position into the shares. And as you know, if you know a little bit how my spreadsheet works, a rolling position doesn't take into account any trade results here. So if I will go now back to my results report, you can see I have only closed one cash secured put and I had made a profit of $96 closed position for that put transaction, and I still have here my open position with my shares. Of course, your question should be, where is taken into account the premium that I've got for my second cash secured put? And that's actually a great question. I go back to the journal and I see that actually I've entered here a transaction price for my shares of 48. But like I said, if you close the cash secured put of a strike of 48 for which you got a premium of $3 and you consider it to be a roll, just like any other roll, you need to take into account premium that you really got at that moment in time. That means that actually my buying price of my shares is not 48, but is 48 minus the premium received, and is 45. So I change this to 45. You can see here on the right, I still have a roll. I still have open position of 100 shares, but actually my unrealized P&L is now 100% correctly showing, being a loss of $159. And also here in the results report, This means that actually my unrealized P&L is correct. You could say, okay, I have closed 2 cash secured puts, but in this case you decided to only consider the first one because the second one was actually like being a losing position. So these are the 2 possibilities how you can enter an assignment into the spreadsheet. For the moment I prefer the first option, the first where I actually close the position with a buy to close action, showing the positive P&L that I've created of that I got on the cash secured put. But maybe in the future I will make in the next version I will change this option, and that you actually go also into the journal, and that you have the opportunity, but that you can select assignment here, and that then also with an assignment this trade result is not calculated, and that you need to adjust the transaction price to have a correct overview of your positions. Okay, with this being said, I hope this answered your question. And if that's not 100% the case, let me know. So that's all for now. Thank you, and I will see you in another video, and hopefully without a cold. Bye bye.